Okay, we thought we'd do just a quick breakdown, kind of an anatomy of a nice low-risk trade that we had today. And I just think it's educational, for anyone who's just learning to trade. VVUS, huge gap up the other day from, 694. It opened the next day at 1089, and then ultimately over the next couple sessions went to 1288. That's just a huge gap in pop. It closed red the second day and then red again the next day. So we kind of threw this on watch as a potential bounce play. All right, now here's the 5-day chart using 15-minute candles, and now I'm going to zoom into just a couple days. This is today's, from here over is today's candle, and this is our today's trading, and this is yesterday's. Okay, in the first 15 minutes, we're using 15-minute candles here. This thing broke above most of yesterday's base. I'm sorry, that would be Friday afternoon's base. So what you have here is people who shorted this. I'm gonna use the term shorted this late. Okay, these are people who shorted it right down here after it sold off the second day and then the whole next day. Anyone who shorted it here thinking it's just gonna like fill this gap. There's that stigma. Any gap's gonna be filled, and you can't always trade like that. So let me go to a 2-day chart again. So everyone who shorted it here, they got kind of a, let me switch to 15s. They got kind of a wake-up call first thing in the morning. Okay, shorted this thinking it's gonna fill the gap. This kind of woke them up. Took out most of this trading. So everyone, from I guess lunchtime on Friday that was short this stock got a little bit of an early wake-up call this morning when it popped. And then it pulled back and maybe gave them a little relief. But we knew that if this thing could turn, it could get a nice subsequent pop if it took out its early high, which was 1129 right here. We called this on our 15s setup. Let me just zoom in now that I've shown you the 2-day chart and the reason for the call. Nice consecutive lower tops and a fairly narrow candle here with a high of 11. We called this at 1101. Worst case stop 1078. So 23 cent risk, and from 1101 it quickly went and then took out the high of the day like we were looking for as a subsequent catalyst. So we had an 1101 entry. It got through the 1128 early high all the way to 1185. So it worked like a charm. Again, the 23 cent risk was only in play. Within 15 minutes, you were well above the high of the day. You certainly were scaling out, taking some off the table and going to a break-even stop. And then at some point, whenever you get a big pop like that, you should probably scale out more. As I was telling folks in chat today, saying, hey, I might hold this for a home run. I said, hey, you might want to pay yourself something here along the way. And so that's the way we teach. And nice low-risk setup, and kind of an interesting breakdown, I think, of the reason for that trade. So we had a few other nice ones today. They were all kind of smaller base breaks, that sort of thing, but very impressed at the resilience of this market. So just wanted to share that trade with you. We'll talk to you later.